And with Oliver Sloup of Blue Line Futures. Right now, he's at the edge of the CME Group trading floor in Chicago. And as we look at our livestock trade, we had higher cash cattle to talk about late Friday on the USDA update, and yet we had the pressure on the futures this morning. Kind of interesting here with the dynamics at work. We have February live cattle now 35 lower. We're trading at 121.17. The nearby December is now in delivery mode, I understand. We have the April contract now 30 lower at 123.33. And on the feeder cattle side, we start with January, where we're now 93 higher at 145.30. March is now 97 higher at 142.85. And it's not too far from our high of the day, within about 12 cents or so of our high of the day. So with feeders going sharply higher to some extent and live cattle a little lower, that would be evidence of a little spreading going on today. Oliver, how come?
Well, a little bit. And as you mentioned, we saw the firmer cash trade come in last week, but I think some people were looking for a little bit higher earlier in the morning. Friday, we were hearing possibly 120 being traded. We didn't quite reach that, so I think you're seeing a little bit of that premium come out of the market here. But overall, we like live cattle on a longer-term basis. We continue to make higher highs and higher lows, not just on a daily chart, but the weekly chart is extremely constructive. And if we can get out above some of these key technical resistance levels, I wouldn't be surprised to see those contract highs retested of about 123.90. Now, as you'd mentioned, feeder cattle obviously firming up a little bit more, but over the past several weeks, they've been kind of more of a dud. So they've been lagging. They're trying to gain some ground here near the bottom end of technical support. 142.50 is going to be a huge level to basically 143. That must hold on a closing basis for the bulls to have some sort of hope in the near term. If that does give up ground here this week and we see a break and close below that, I wouldn't be surprised to see some accelerated selling pressure come into the market.
Now, what about on the lean hog side? Let's take a look at what the lean hog futures are doing. And of course, a week and a half ago, they had some just humongous swings back and forth. But right now, we have a lot of pressure on most contracts. December is a little higher. It's up 48. But the February, down 95. We're at 66.92 right now. And we have April, 85 cents lower at 71.47. You talked about the feeder cattle chart actually showing a big-time decline there, and it looks like it may be having issues. What about on the lean hog chart?
Lean hogs have been, as you'd mentioned, chop. They've been extremely choppy, which has made basically traders on both sides, bullish and bearish, kind of temper their expectations. We like being long the market over the intermediate term, but have been trying to be a little bit more nimble and trading around a core long position. We're starting to shape up what looks like to be a little bit of a bull flag. We're making higher lows and lower highs, so you get this pennant-looking formation. If we can get out above technical resistance, 69.50, I think this market can really accelerate to the upside. So we like being long, but again, it's one of those markets where you've just kind of got to dance around a little bit more as the volatility continues to be relatively high.